Hi, everyone. Thank you for joining us today. We're just going to wait a few more moments for some more folks to sign on. Thanks. Hi, everyone. Welcome to the TBR Webinar series. Today, Principal Analysts Allan Krans and Patrick Heffernan and Senior Analysts Kevin Collupy and Hristov will be discussing COVID-19's early financial impacts, cloud and SI vendors. Before we get started, just a few housekeeping notes. At the bottom of your screen, you'll see a series of buttons. From left to right, you can access the slides, audio controls, Q&A, speaker bios, and our survey. After the webinar, you will receive an email with a replay link as well as a link to view and register for other TBR webinars. If you have any questions for us, please submit them in the Q&A widget in On24. You may also reach out to us after the event at webinars@tbri.com. Thank you again for joining us, and here is Allan to begin the webinar.
Great, thanks, Sarah. Thanks, everybody, for joining. We've been doing a lot of coverage around the impact of COVID-19 over the past 2 months. And really up until the last couple of weeks, it's been speculative in terms of the hard financial impact on the IT vendors that we cover with our ongoing research. And so you can see that there's quite a bit of coverage that we've produced looking at different angles of the virus and the pandemic and the response and how that's impacting employees, how we've seen vendors, at least qualitatively, make adjustments to their strategy. And there's a lot more coverage for you to dive into. We've included a few excerpts, but there's a section on our website that's now dedicated to the COVID-19 research. And so with today's webinar, me and my colleagues will go through what we've seen so far in terms of the early financial results. And we say early because only a portion of our vendors have released so far. And in a lot of ways, it's a partial quarter of what the real true impact will be as we progress through 2020. But we've pulled together what we've seen so far, and we'll go through kind of first starting with what's going on with customers, because we do have feedback and research that reflects what's going on in terms of adjustments to their businesses and their IT strategy. Patrick will go through some of the people aspects of this, which is really at the heart of everything we're seeing in those adjustments, and then dive into the earnings. So I'll go through what we've seen so far in cloud and software vendors, and then my colleagues on the services side will look at some of the larger SIs and global service providers in terms of their financials as well as strategy. And then kind of close with looking forward to the remainder of 2020. And it's not really too big of a spoiler alert, but we do expect the ramifications to get more severe throughout the course of the year, and we'll go through a little bit of what we see driving that and what to expect from differences in terms of vendors and strategies that are going to be coming as a result of this. So to start with the customer view, we have ongoing research in the cloud and software area, speaking with cloud adopters, and we're able to get two views from them quantitatively on this is the current impact in terms of what they're reporting and change in IT strategy. And really just kind of starting overall, in a lot of ways, the technology sector in particular has been well positioned and not as deeply financially hurt, certainly as a lot of industries have been, thinking about oil, travel, those things where there's been a near total shutdown of business activity. And it really reflects the increasing role that technology plays for businesses around the world and their employees in terms of staying productive. And so as we look at what folks did in response to the effects of COVID-19, there's a big bump in spend as a lot of organizations shifted to a remote work environment. Some had experience with that, but overall it's a significant increase in a lot of organizations that we've spoken with, a number that really had no work from home participation or enablement for their employees. They too have gone to a nearly 100% across the board work from home type environment. And so you can see there was a lot of spending and budget allocation, redirection in a lot of ways to make sure that employees can get up and running with a different work structure and being remote. In terms of some of the downside impacts, I think the biggest one, at least initially, this data reflects kind of through the middle of April, was that a lot of projects that were longer ongoing weren't directly related to helping organizations through the effects of the COVID-19 virus were put on hold for a variety of reasons, budget, travel restrictions, general uncertainty. All those things I think played a role, but in general, a big kind of halt to a lot of existing project work that had been ongoing. And then also a significant portion of organizations freezing budget. In some ways that's related to the shift in spend to remote work. And also on the far end of the spectrum, you did see a sizable portion that have already started some of those spending reductions, headcount layoffs, those types of things. For most of the interviews we've conducted, and they run across the board in terms of industry, those actions really hadn't taken place as of yet, but there was expectation that as more of the kind of deep financial impact and business disruption continues, they will get to that point where it will be a net reduction in terms of staff as well as technology investments as a result. And so this gives you a sense, really there wasn't a tremendous amount of change between the two pulses, although the one that did stand out was the use of cloud resources. And we saw that reflected as we saw some of the early cloud vendor earnings talking about the increased utilization and demand for cloud resources as their customers adjusted to the pandemic. We'll shift a little bit to, we also asked folks about long-term. And in a lot of ways, there's going to be some things that carry on. You do see that a fair number of organizations, about 30%, expect to go pretty much back to normal in terms of their IT behavior. Now that could change. The timing is always uncertain, and things are going to change throughout the course of this year. But for some, they expect to go back to pretty normal strategy and an investment approach. The biggest change as a result of this is really the focus around cloud technology as part of their strategy. Nearly 50% in both pulses expect that they'll utilize more cloud resources now than they have. And then also very telling is on the flip side of that, very few, and it actually went down in the second pulse, expect that they would actually decrease their use of cloud as a result of this. And I want to hone in on that a little bit because I think it speaks to really the most important sentiment that we're hearing from customers, especially on the qualitative side with interviews, is that digital transformation is now more important than ever for them. For a lot of companies, part of that is they've gone through more transformation in the past 2 months than they have over the past decade in terms of being more agile and distributed and focusing on business continuity in the face of uncertain conditions. A lot of those would have been longer-term projects outside of this, through the end of last year, that have been very quickly implemented in the face of the challenges the COVID-19 has brought. It's also, and so for a lot of customers, cloud is very closely correlated in enabling digital transformation. They see them as paired together in terms of the type of solutions that are going to benefit them, not just through this situation, but also as they face additional future uncertainty. It could be a totally different scenario. As we've seen, you don't know quite what to expect, but the ability to scale very quickly, deploy new services, access innovation that huge firms are putting into response. And so you've seen from a lot of the major cloud providers COVID-specific data sets and solutions that help their customers react and respond to this. Customers are all really kind of seeing that as one of the big benefits of not trying to do everything in-house with their own resources. And so that's why we think it'll propel digital transformation in general and specifically supported by cloud going forward. And the last thing I'll hit on, I'll hand it over to Patrick, is the cultural change that a lot of organizations have gone through. Again, that's been very rapid for them, that a lot of their long-held approaches and strategies simply weren't feasible as they responded to this particular crisis. And so again, there's been things that were very difficult and slow to change before, needed to change very rapidly in the face of this response. And those are all things that we think will have long-term impacts in terms of how customers think about and use technology for their businesses. Patrick, I'll hand it over to you.
Excellent, Allan. Thanks so much. So let's jump to the next topic, which is going to center. We're going to talk for a little while about the IT services vendors themselves and the consultancies. And let's see, here we go. This doing these webinars remotely is definitely a change of pace, and that's actually sort of the underlying theme here about how much has changed within the IT services vendors and the consultancies in this whole space because of everybody working from home. And this remote working is been, as Allan mentioned, so this digital transformation, and that would have taken 3 years, it's taken a couple of weeks. That's been true for everybody across the board. And so I want to talk a little bit about people now and what the immediate impact has been, and then talk about what the longer term impacts we think are going to be. And this is really based on a couple of things. One, the earnings calls that have come through in this at the end of the first quarter and into this quarter. And then secondly, a lot of phone calls that we've had with the IT services vendors and the consultancies. And the number one thing on their minds when this pandemic got going was people, was their own people. How were they going to facilitate working from home, ensure their safety, and then bolster confidence? So let me go through those real quickly. Everyone had to stand up remote working capabilities quickly. And during that time, during those first few weeks when the pandemic was really hitting, at least hitting the US and parts of Europe, the initial expectations that we heard was that efficiency, how well people could get the job done remotely as opposed to being in the office or being on site, was going to be about a 10 to 15% lag in terms of 10 to 15% less efficient. But that lack of efficiency, or that gap, was going to close pretty quickly. And it's something we're coming back to now with a lot of the IT vendors and the IT services vendors and consultancies to see if that's been true. Of course, a lot of the vendors have very large offshore staff, particularly in India and other places, and that's been challenging. But at the same time, it's an opportunity for these vendors to gain an awful lot of insights into how to work remotely, how to staff up remotely, how to continue working remotely. And that's those kinds of lessons and those kind of capabilities, of course, can be shared with clients and adjusted over time. And the numbers are impressive. And I'm going to mention a few vendors here, but by no means is it comprehensive, and I'm not singling them out for any other reason other than they caught my eye on what they're doing. Take Capgemini. 50% of their employees are based in India, and they've already gotten to the point of having 95% of their workforce across the globe working from home, which is pretty impressive. And I'll come back to Capgemini in a minute. Safety and ensuring safety. One of the things that happened very rapidly during this pandemic was PwC, again, singling out a consultancy here, but PwC stood up a solution called Check-in, which allows their clients, and it's free to their clients now, and it allows their clients to right away get a pulse for how many people can do their job that day. So we wrote something about it. It's on our site. You can see the special report on it, but it basically is a way of ensuring productivity. It's ensuring safety. It's getting a quick check for HR, for admin, for people managing large enterprises, how many of their people can safely do their job that particular day. And of course, over time, you learn all the trends. And I think it sort of, that solution by PwC reflects a lot of the thinking of all of the different vendors that we've talked to about the importance of their own people's safety coming first. And then the last thing on this side, bolstering confidence. Again, I'll come back to Capgemini. I think a great example of this, they gave raises to 84,000 of their people working in India. At a time when we're all expecting a global economic slowdown, when we're not sure if this recovery is going to be, V-shaped or U-shaped or what, to be able to have the smart thinking to go ahead and invest in your people and give them the confidence that their job is going to be there when we come out the other side of this, I think is pretty fantastic, including paying employees that are on the bench, not on a billable project right now. And I know there's a lot of other companies that are doing similar things, but again, I think it's indicative of the employees first mentality that has been brought on by this pandemic. And before I switch to where are we going to see, what are we going to see by the end of 2020, I do want to mention we're going to be rolling out another special report next week on something that Accenture put together, People Plus Work. It got a bit of attention. They were one of the founding 4 companies that put this together, and it's essentially a platform that allows companies who have a surge in demand or whose demand for employees is surging to get matched up with companies who are furloughing lots of employees. And again, it's all B2B, and it's built to be simplistic. It's built to be elastic, meaning that when those surges change, when those trends change, when those companies go from, being in demand for employees to having extra employees, this platform will still be able to help. And I think all of that, again, reflects this sort of pandemic mindset of putting people first. So the question is, if that's the mindset now, if that's the reality and the trends now, what's going to be true by the end of 2020? So this making remote work more efficient, or measuring how efficient people are at their jobs when they're working remote, this is something that's always been a challenge. But of course, when companies only had 10% or 15% of their people working remotely, it really didn't matter. Now we are hearing of IT services vendors who are thinking 5 years ahead and saying, are we going to have 75% of our people working remotely? And if so, how do we measure that efficiency? I think it's sort of one of the big questions out there, not just for the IT services vendors and the consultancies, but really for everybody. And here, again, I'll mention the PwC app or PwC solution that begins to get at that. What are the things that are keeping people from being efficient? What are the trends that you can see? Where are the problem cities, problem locations, problem business lines, service lines, whatever it might be? So I think by the time we get to the end of 2020, every single one of the IT services vendors and the consultancies will be offering some kind of solution, if they're tech-led, or some consulting approach on measuring and enhancing productivity when people are working remotely, because of so many of their clients that will be in that place. The next piece, though, is sort of balancing remote work and offsite. And if the first one is true for everybody, how do you measure efficiency of people working remotely? The second one is a lot more true for the consultancies, which have to look at how do they do their business, how do they continue to consult if they're not on site. And it's been it's been a question for a while, but this pandemic certainly accelerated the importance around this of how you find that balance. And I think it's really going to be telling for the consultancies that invested a lot in those special experience centers, innovation centers, immersion centers, whatever you want to call them, the special facilities that were built specifically for bringing a diverse group of people together, diverse within their clients, diverse within their own firms. Those spaces are certainly not cheap, and they certainly have been an important part of how those vendors went about retaining clients. So as client retention becomes a really critical, important priority for all of these vendors going into the latter half of this year, particularly as their clients begin to experience the economic pain that pretty much we're all experiencing now. I think as client retention becomes more important, how these centers that were built in many ways to do exactly that get used, particularly in a predominantly work from home or remote working environment, is going to be really curious to see. And honestly, we don't know what the trend is going to be there. It's something that is, I think, important to keep in mind. And then the last part on automation, I'm actually going to hand over to Boz, who's been leading our research around headcount, global headcount, and automation, and the impacts of that on the IT services vendors and the consultancies for a while now. But I just want to say that from my thinking, this is probably the area where we're going to start to see the pressure on that ethos that came, that employee first, that people first thing that I've been talking about since I started talking. If the pandemic caused a lot of employers to look at their people and do everything they could for them, how long until that pandemic effect wears off and automation becomes something that has an impact on the number of employees, has an impact on the way that people are doing their jobs in the ways that we've all kind of expected it to be coming for a while. So with that, I'll hand it over to Boz to sort of go through the real nitty-gritty on that. Boz?
Sure. Thank you, Patrick, and hello, everyone. As Patrick mentioned, I think so automation is certainly an area that have had many to put their hopes on, have gone through its hype cycle, and now it's a time to see what really can do for services vendors, how they're actually delivering services and how they're actually able to develop a non-linear growth model, something that they've been working towards for the last 10 plus years at least. And I think there's an opportunity for a lot of the automation tools that those vendors have developed to really scale up. Certainly the human side of the equation, as Patrick mentioned, it's a critical component to consider. We've seen vendors continue to add people. We've seen people to add skills and upskilling resources to be able to kind of maintain with the demand so far. But the whole shift to work from home right now, I think it's an important time for automation to scale up. Able to for vendors to be able to standardize delivery, able to balance the cost equation, and at the same time to test new models using automation tools. That we know some vendors are a little bit more mature on the curve when it comes to automation. Others are just maybe even in the beginning stages, and we also know from a technology standpoint, there are a number of tools out there that from an RPA to intelligent automation to artificial intelligence, that everyone's thinking different about how to use and how to best utilize those tools. But what we see in the market right now is that the whole notion of the RPA supplementing jobs and trying to get rid of jobs. I think the RPA itself as a technology is here to stay, but not on its own. It has to, when vendors are developing the tools, when they're trying to think through what the next phase of automation is going to look like, they need to think about making it AI ready and trying to be able to be integrated with all the rest of the technologies that the vendors are using in order to support service delivery. Because in a world of all remote work right now, essentially, automation is kind of the holy grail of being able to standardize service delivery. We know that that's going from an organization to organization, but I think the next phase that we're going to see probably within the automation world when it comes to technology is establishing standards for automation that are cross-technology, okay? Which, as I start thinking about now, 5G has to connect with IoT and Edge and everything else, that the bigger, broader picture of digital transformation. So I think it's a kind of in quotes, good time for vendors to really make sure that standardized service delivery of some of the basic tasks are perfected, because the next phase of automation will be all about establishing standards for cross-technology connectivity and data interoperability. Certainly something that it's not going to happen by the end of 2020, but I think the current crisis will accelerate that cycle, and all the hype and fear from the initial thinking around automation and how it's going to supplement and get rid of jobs. I think it's going to be actually trying to create a little more better opportunities once the crisis abates. So kind of wrapping up that section for Patrick, where he kind of started like what we see today, what we see towards the end of 2020, automation will be kind of a link between what the world was before COVID-19 and what we think that's going to be post-COVID-19 when it comes to service delivery, and really trying to develop more of a scalable, non-linear growth models. And, as we think about that, we know some vendors, like I said, they're in different parts of the curve. We want to kind of get into some of the vendors that we have seen so far, their releases, and touch upon some of their automation strategies and others, how they are reacting into the COVID-19 crisis. So the couple of the vendors that I want to touch on are Accenture and Infosys. So those two vendors have released their financials for 1Q20, and we have gained some visibility into the expectations, what they're expecting as companies, how we see them as companies. So Accenture was the first one to release for 1Q20, was in mid-March, and was the company that I'm aware so far have kept its guidance. Yes, it did slash its fiscal year 21 guidance. However, it kept it. It's fiscal year 20 guidance, but it kept its guidance. So it went from a 6 to 8% constant currency to 3 to 6% constant currency, which kind of speaks volume from where Accenture was coming out of first half of its fiscal year 20 and the overall position of the company in the market, how coming from a position of strength, and also coming from the leadership of the company, how well they're able to manage the internal organization and in terms of knowing, shifting resources and going to remote workforce, and able to mobilize their business continuity and resiliency plans to be able to also ensure that client retention continues. So they're still providing guidance. They're still providing guidance on both revenue as well, growth as well as profitability. Accenture has a really strong footprint among its Global 2000 clients. It has they have a robust account management. I think the company has 95 of its top 100 accounts. They have a relationship for over 10 years. So that's the kind of longevity of the relationship, which in the times of crisis certainly is helping them to kind of maintain that client retention. Also, going to the automation component, Accenture has been investing and kind of been ahead of the curve for many of the vendors in automation platforms and tools like MyWizard and MyConcerto, and most recently MyNav, that have been able to impact the business delivery model, essentially, and able to increase some of the remote work with standardized and secure service delivery. So it does have a good framework to start from. That's kind of the message for Accenture. And while we expect certainly 2Q20 revenue growth, as everybody is expecting it to dive in, we expect for them to rebound in the second half of the year and meet their updated guidance for 2020. On the flip side, we see someone like Infosys, which did not release guidance for fiscal year 21. They just wrapped up at the end of March. They just wrapped up their fiscal year 20. They came out of a very strong year, very strong 2 years actually, kind of like in a resurgence of their performance comparing to the previous 2 years. And with the new CEO now, they certainly have gotten back to doubling down on their strengths in a services supply side of the equation. Is really helping buyers to, IT buyers specifically. That's their core buyer. That's really, doubling down in the cloud and visualization, virtualization, rather, type of activities. So this is something that they've been able to help. But just coming, I think, for Infosys not providing guidance is somewhat back to their culture, and not just Infosys. Many of the companies, they're kind of like, okay, there's not enough visibility. Obviously, nobody knows what's going to happen. let's not, make stakeholders and shareholders upset if we don't meet our guidance. So let's just keep it kind of a, quiet, so to speak, and let's more or less coming from a point of under promise, over deliver, essentially, because they came out with, like I said, with strong growth in fiscal year 20, healthy pipeline of bookings, large-scale bookings across both EMEA and US when it came to the two core markets for Infosys. So coming out of a good position, strong position, but I think it's more of their culture, how they're trying to be a little bit more kind of step back and not trying to go too aggressive into the messaging. However, in my opinion, I think someone like Infosys, they have a really strong balance sheet, really healthy balance sheet, no debt on the books. They could use that crisis right now to go a little bit more aggressively and trying to pursue some specific strategic investments and even go after some more better acquisition targets, essentially, that can help them to kind of catch up maybe with some of their peers and disrupt some of their peers and take business out of peers that may not be in a financially healthy position, essentially. On their side, when it comes to automation, they too have been investing heavily, but I think, Infosys, again, they've been trying to balance that revenue growth and headcount growth. We saw a decline in the headcount growth just sequentially in 1Q20. I think, I think Patrick mentioned that Capgemini is giving wage increases and trying to retain employees. Infosys kind of put a freeze on salary increases and promotions right now. So they're trying to kind of, not to go too far out before gain some more visibility. But I think that some of the tools that they have through EdgeVerb subsidiary, as well as like Infosys NIA platform and similar tools, can help them to standardize those service delivery components. But I think the big plus for Infosys moving forward, not just from a automation standpoint, is they are one of the core strengths is playing on pricing, right? So they have a good price, kind of a pricing model when it comes to providing and offering pricing agility. This is something that India-centric vendors are known for. They compete on price. I'm not saying that others don't, but they're good at being flexible with their pricing, where Accenture may be a little bit more challenged because they come a little bit more premium priced, and that could be a challenge with some of those maybe upper mid-market clients, essentially, and that may see essentially too expensive for their purpose in this current environment, where Infosys, playing on the services supply side and playing onto the core value proposition around competing on price, I think they could capture some new business in that way. So both vendors, as you can see on the graphs, are expecting to see a deep dive into Q20. But like I said, Accenture released guidance, even though they slashed it in half. Infosys is kind of staying, using the momentum to be quiet, essentially. But I think they're gonna over deliver in that case comes end of 2020. I'll turn it over to Kevin to see if he can provide some more guidance on a couple of other vendors in the IT services.
Perfect. Thank you, Boz. So following up Boz and Accenture and Infosys, those companies have already reported, as he mentioned, and you can kind of glean some light, take some of the facts and kind of project out. I'm going to take a different angle, and I'm going to speculate on a company, DXC Technology, that's yet to report with the impacts of COVID-19 baked in. DXC last reported in February. It was its fiscal quarter 3 of 2020. And that was through and including December of 2019. They'll next be reporting on May 28th for the months of January, February, and March. So they'll get those March impacts of the local shutdown here in the United States and really globally. Since February, when it confirmed guidance for its fiscal 2022, due to a volatile market environment, DXC has withdrawn its previously stated guidance, came out with a press release and used those words. Really what's concerning is that during its November 2019 call, DXC already guided down its fiscal 2020 range from $20.5 billion down to around $19.6 billion, or down 4%. And at that time, it only estimated about $15 billion revenue figure for its fiscal year 2022. That ends up being nearly 23% lower than the estimated current year figures, or approximately a negative 12% CAGR over those next 2 years. Of course, that's taking into account upcoming divestments. But, one of the more difficult things being tasked with following, and modeling DXC and really previously CSC is really its lack of apples to apples compares. It seems that it always has something large, something inorganic happening, really often large, and it's, just creates spikes and lumpiness in its growth rates and its decline rates. Such as the $2 billion acquisition of Luxoft last year, really even going back to its formation with the addition of HPE Enterprise Services back in 2017. And with that spin merger, came large divestments such as the United States public sector business that was spun off to form Perspecta, and now the planned $5 billion sale to Veritas Capital of DXC's U.S. state and local health and Human Services Group that houses its stronghold in that state-level Medicare and Medicaid management systems. So, what does this all mean for DXC? Really, to put it bluntly, we expect continued erosion of its legacy services base, really masked by inorganic activities such as acquisitions and divestments. And really, it's only going to be accelerated by the impacts of COVID-19. Being a traditional IT services company, a lot of DXC's workloads are resource intensive and often on site. And really, the worst impacts will be for the April, May, and June calendar 2Q20 quarter. We think that will be one of its hardest hit quarters in terms of revenues as far as direct impacts of COVID-19. Then it could slowly begin to recover, going into calendar year 2021. But however, with the recent addition of the CEO, Mike Salvino, DXC has the opportunity to kind of turn the corner, press the reset button here. The company's focusing back on its core strengths, its infrastructure strengths, rather than trying to compensate areas where it may be weak. It's taking an in-depth look at and it's reviewing accounts. It started at the last call. They termed it with their trouble accounts. In some of those cases, they fixed the issue. In other cases, they just terminated the relationship, which, could free up some resources to serve, other clients, can lead to improved profitability, and, really developing closer relationships with its remaining clients. We suspect that DXC will also invest in its employee, trying to, tackle any lingering internal employee morale issues. So all in all, it could be a good opportunity for DXC to accelerate what it's already kind of coined and is calling a transitional year. And with that, I'll go ahead and turn it back over to Allan. I think he's going to discuss some of the earnings from the cloud point of view.
Hey, this is Patrick. I'm going to jump in with one quick point before we go to Allan.
Sure.
So Kevin raised it when he mentioned Mike Salvino at DXC, and Boz didn't mention it, but could have the leadership changes that happened throughout 2019 in the IT services space and the consulting space to a lesser degree, and to the software and cloud vendors. A lot of new leaders right as this pandemic came around. And I think for us, when we look at that guidance spectrum, part of what we're looking at is a reflection on how leaders are handling this, both at the strategic level, and then which leaders are able to look at what's happening operationally day to day and make the best choices and have the courage to stand up and say, this is where we're going. So I think leadership is a huge piece of what we're looking at here. And with that, I'll turn it over to Allan.
Great. So in terms of the cloud and software side, we have a good sampling of earnings out so far. And I think what stood out to us overall is that there were a fair number of bright spots for these organizations, at least early on in terms of the crisis. We did rank them a little bit in terms of on that spectrum of whether it was a net positive, which it was for a couple of the vendors, or a negative impact on their businesses, at least in the short term, or kind of neutral in the middle. And what you see is really a couple things. First, the shift to cloud for IT vendors and software vendors, has been painted as one that can be financially difficult to shift to that type of revenue model and get costs in alignment and do all of that work. And the good news is, early on in this crisis, that there's actually financial benefits to the shifts that were made over the last decade. So any business that is annuity-based or generally cloud-based has performed better in the early days of the crisis. really the software as a service businesses performed best. Infrastructure as a service was relatively stable, which is good news given the alternative, obviously. And transactional businesses were hardest hit. So the traditional software licensing business, Q1 isn't a huge software licensing sales push, but a lot of the activity does occur right up at quarter's end. And so obviously with the timing of the effects of COVID-19, it was particularly bad for a lot of the vendors that rely more on the transactional model. Oracle, SAP, and IBM to various degrees have more reliance on those business models, and also some include hardware businesses, obviously, which was especially difficult given the supply chain constraints, especially early in the quarter. If you look at across some of those businesses, ServiceNow, really a 95% subscription revenue base, so very resilient in the face of that, performed very well. SAP and Oracle certainly have a bigger mix than they had 10 years ago. If we can remember back to the last financial crisis and recession, but they're a little bit lower. It's right around 70%. And IBM is the lowest of the group at 60% in terms of the annuity, or there's a lot of different terms for it, but long-term subscriptions that come right off the balance sheet for the most part. And so there's been built-in stability for a lot of those in the early days. Microsoft is actually a vendor that we think stood out head and shoulders above most others in the face of this. And that brings in another element that any business that can help with the transition in the reaction to the COVID-19 virus, both in the work setting, obviously there's been blending of work and home life for all of us as we've gone through this, spending more time at home and working out of remote locations. Microsoft and Google are kind of uniquely positioned to have stronger presences in both sides of on that, both working at home, and a focus on education, which in terms of industries that have been impacted is right up there with one of the most severe, and really technology has been a core component of keeping what semblance of an education system was in place before going with all the restrictions on in facility learning. A couple other things to call out as we kind of look at the vendor impact on cloud and software. Boz had mentioned strong balance sheet. I believe it was of Infosys. And what we've seen on the cloud and software side is those vendors that had financial strength coming into this have already pledged to continue investing in innovation, doubling down on certain things, keeping more employees in place in their jobs. ServiceNow announced there'd be no COVID-19 layoffs throughout the course of this year. So those vendors that have more of the financial stability are going to use this as an opportunity to, not just take a pause and a cutback, but really continue investing to improve their positions throughout the course of this. Another aspect that all these vendors across SI as well as cloud are dealing with is the shift to a remote sales environment, and not doing as much in-person selling, and being forced to transition to a digital approach in a lot of ways, because phone, email outreach is not as effective as it has been historically, and it's been a process of shifting off that for a lot of these firms anyway, but it's put an emphasis on how to drive demand, how to generate interest, where there's so much focus and coverage on the virus. So that's going to be an ongoing challenge, because the impacts of this are not going to go away. It'll be a phased approach probably throughout the course of this year. So shifting to a digital sales approach, we saw IBM, SAP give some insight into their strategy for how to maintain progress in terms of sales activity with all the challenges that they face in doing that. Microsoft's promoting, their LinkedIn and Sales Navigator tools to accommodate that change in terms of the sales strategy. So that's all an ongoing, evolving process, but it'll be key to determining who fares better during the course of this. And I think that cuts across vendors of every technology segment in terms of how to make those adjustments. And then the last thing is, in terms of, we'll speak a little bit about going forward, but when you think about cloud and software, obviously annuity makes a big difference for the current quarter. However, there's still delays in terms of new cloud signings that you're going to see roll out and have an impact financially throughout the course of 2020 and even into 2021 with those multi-year contracts that a lot of them have seen the same type of drop-off in new customer signings as they did with the software license and transactional businesses. So the story's not set in stone in terms of cloud being more resilient over the longer term, and that'll have ripple effects on services engagements and everything that gets bundled into the new cloud activity, and so it'll be a much broader impact than just the financial results for the cloud vendors themselves. So I'll hand it, I think, back over to Patrick.
Actually, this is Boss. I'm taking. Yeah, that's okay.
Go, Boss.
So yeah, we can just move on to the next slide. Thank you. So kind of to wrap up the presentation today, I wanted to kind of look into market opportunities moving forward. And I think so far the biggest emphasis during the presentation today has been on employees, right? And this is kind of like no surprise, right? That's kind of like the greatest assets for service organization as well as cloud and software, but just in general, just have to think employee first. So the graph we have here presented is actually coming from our digital transformation insights research voice of the customer. It was actually, this is based on results pre-COVID-19 as of December 2019, so just a couple of months before that. And as you can see it, we have customer experience, CX, focus on the marketing, services, sales really being the main focus in the front, and it's always been, it's been for a while. And HR operations as an initiative for a lot of the buyers have been kind of like more in the middle, certainly something that vendors and enterprise buyers have had in discussions, have been some opportunities to be addressed. But we think that with COVID-19, and so much emphasis on employees first, employee and culture first, kind of like a focus, the HR operations will kind of take a center stage, at least for the next 6 months, if not longer, because it's an important shift, important pivot as we think about what we have discussed so far, how employees are able to execute on business continuity plans, able to still deliver standardized services, support client engagement, and how also vendors are able to address those challenges when it comes to leadership and comes to plans and processes that they may have had in the past, and how they're looking forward and how they're looking into the current financial health of the organization. So we see that we have not completed the voice of the customer around right now, but we have had multiple conversations with buyers as well as vendors that is giving us an indication that HR operations is shifting, which we believe is going to be a huge opportunity within digital transformation coming forward in terms of where the opportunities for service organizations are. As Allan mentioned earlier, digital transformation is more important than ever right now for business continuity, but I think it's not so much of the end buyer and CX component. I think right now we'll be focused on the EX. And then we heard about ServiceNow is a great partner for a lot of organizations that they go and develop a lot of those HR operations opportunities and service capabilities. We have Workday, we have Oracle, PeopleSoft, all these other vendors that have from the software and technology side that services vendors are partnering with, but also it's all about thinking around who do you sell to. That's one thing. So you have to, as a vendor, a services vendor, you have to think about now what? Who do I sell to? Now if I have to maybe reorient my selling priorities, if I've been selling, been pushing for CX, customer experience, kind of like focus on the CMO or chief sales officer to chief revenue officer. Now, how do I sell to maybe a new buyer? Who's that new buyer? Chief human resource officer or somebody else within an organization. So it's important to kind of think about who has those relationships in terms of services vendors and how those relationships are being managed in the time of crisis. So again, the headline suggests that, but it's something that we are seeing as a huge pocket of opportunity for kind of shifting from CX that has always been driving in IT operations to really focus on HR, because if you don't take care of your employees, everything else as we shift more towards work, more from home and remote working, it's going to be a major challenge. The whole CX idea will certainly be challenged. So that's one piece from a digital transformation opportunity. Certainly the cloud and everything else that, from a technology perspective, Allan talked about it, comes along with it. But the other piece is that, as I wanted to emphasize here, is that as we think about, where those opportunities are and how vendors are trying to generate new pockets of growth, we talked about earlier about some of the challenges that around profitability, right, and how maybe vendors have not been able to generate enough profitability when it comes to automation. They're trying to standardize, they're trying to do all these things, but automation has not gotten to scale yet, in terms of to have a tangible impact on the vendors' bottom lines. So what we see right now in the market is something to keep an eye out for is vendors are investing in sustainability initiatives. And when I say sustainability, it kind of goes both ways. One is for to develop their own organizations and kind of have a sustainability goals to have a to go green, essentially, in order to cut costs, to generate costs, right? And the other one is to consult on the buyer sustainability initiatives. So right now, the first one is the one that we see a lot of vendors putting a lot of emphasis on and trying to kind of create a channel for additional cost savings. It's a great PR in the first place, but it also helps them to generate certain cost savings that maybe automation has not helped them to reach those savings. We think that there might be some opportunities for vendors to think even bigger right now, as more vendors are probably shifting to remote work. Are they going to really need as much physical space? How are they going to utilize that physical space? So there's a lot of like a new pockets of opportunities and challenges for vendors, but it's something that we are keeping a close eye on for, and I think COVID-19 will certainly accelerate certain pockets for maybe consultant on sustainability for a lot of the vendors that maybe already have a good established frameworks. Some of the vendors we know, most of the vendors that we know that have sustainability consulting practices are rather small right now, but we see those kind of a growing in a good place in terms of adding the resources that I can consult on and maybe start thinking about the long-term connectivity there is around smart buildings, smart cities, the connectivity layer, IoT. That's kind of like the long tail of opportunities that sustainability can lead to when you do consult on sustainability. But I think for vendors right now to generate their own profits, sustainability provides a great channel to do that. And kind of to close the loop back, I think important to think about is those vendors that actually take those savings and put into reskilling employees rather than trying to pay dividends to shareholders. I think those will be better positioned to be able to go through and to be able to sustain the right bench and have the right skilled bench once COVID abates. So it's a multiple steps. I would say one is, like I said, the CX moving to EX. The other one is sustainability and the cost savings that sustainability initiatives can help, and those savings can be generated back to reskilling. So kind of those two are centered around the employee experience. So I'll turn it over to Allan or Patrick, see if they have any kind of closing comments on any of those or questions.
No, I think I'm good on my end. In summary, I think looking forward, we're going to continue to monitor it closely because we think this is just a sampling of the adjustments and financial implications that IT vendors are going to face.
And I think we have time just for a few questions, so we'll get them out the door as quick as we can, and then of course you have all our information here. You can reach out to us directly with other questions you might have after this. But Allan, one of the questions was asking for a bit more detail on SAP.
Yeah, absolutely. So in terms of SAP, they're in a little bit of a unique position. The current quarter, I think, wasn't as impacted as you'll see Q2 and Q3. They're really reliant on a lot of business transformations, especially for driving the S/4HANA business. So you saw go lives progress pretty normally through the end of this quarter, and they were able to do shifts to a remote work strategy for a lot of those deployments. But all of the consulting had been done for those, and they were really kind of close to the end zone, if you will, in terms of just pushing it into production. You'll see a delay in terms of existing projects that still have the underlying transformation of business process to go through before the technology can be rolled out. And so I think they'll rely in some ways on their SI partners to be effective in a remote capacity to help customers through those transitions. The other thing that I think they could use to their advantage during this, and they've already made announcements to do so, is the use of Qualtrics to get feedback from a lot of employees as they've gone through this transition. They've been promoting that to integrate, particularly with the HR suite to do. They're calling it HXM, and so they're doing some spiffs to offer that, make that more available. I believe at no cost for a lot of customers, and so I think they'll see longer-term benefit in terms of integrating that form of feedback, again, from people within their organization and employees to their longer-term benefit. But yeah, there's still significant portion of their business through license. A lot of the S/4HANA deals are traditional on-prem deals, and so they saw the tail off kind of midway through Q1, and I think that they're already expecting that will continue throughout the year. In addition, are anticipating customers to miss payments and ask for additional time for some of those existing contracts. And so again, there'll be more of that, and they're kind of bracing for the more severe financial impacts coming up.
And I would add one more thing about SAP. We just did a Digital Transformation Insights report on SAP's changing partnerships, and we focused particularly on EY and Atos in that piece, but it was published before the pandemic. But since the pandemic, we've already spoken with SAP about how they're approaching their ecosystem and sort of the way that they are expecting to partner differently going forward. And I think that carries on with the theme that we had already seen from them. And I think as a huge player in the ecosystem, how they partner is going to have a massive impact on everybody else. One other question we can get in here real quickly. Do you see the erosion of margins for majority of players considering considerable pressure from clients to cut the rates? Boz, you want to take the first stab at that?
Yeah, sure. I mean, I think I kind of alluded that a little bit already from my comments with automation and trying to standardize services. I think in general, vendors have been seeing pressure on margins for a while now. And that's one of the reasons they are trying to find new pockets of opportunities where they can save costs, like sustainability initiatives that I just talked about. Will they see more pressure as a result of buyers asking for pricing agility or extending payment terms? Likely. As I said, automation has not reached a scale in terms of service delivery to have a positive impact, a sustainable positive impact on vendors' bottom lines. So I think that's where the challenge is that, if vendors cannot develop a sustainable non-linear revenue growth model, especially on the services side, they will likely face pressure when it comes to the terms because they're going to have to shift to different revenue model, as been talking about from an annuity standpoint, as well as hitting their profitability because they're going to have to provide some more flexible payment terms, and ergo the need for and the fact that why so many vendors are not providing guidance because I think they're anticipating more of pressure from their clients, and they don't want to present some kind of a guidance to Wall Street that may not be able to hit, and then obviously impacting their share price and whatnot. So certainly expecting to see in some pockets with some vendors to have even a bigger impact than others. But I think the margin erosion has started way before COVID-19, just because vendors have been challenged with balancing revenue growth with innovation and automation at scale.
Great. And that's the last question we have time for today. I just want to thank everybody for joining. We know that time is valuable in today's environment, and we look forward to continuing to bring you the impacts of COVID-19, both short-term as well as the long-term changes, because we really do think that there'll be things that persist coming out of this that are going to change the IT industry. And so we'll look at that from both a customer as well as a vendor perspective as part of our ongoing coverage. So let us know if you have additional questions, and definitely check out the section on our web portal and blog for the existing research, as well as everything new will be put out there as well. Thanks for attending.